Hello, everyone, and welcome. My name is Amanda Waddell, and I'm the training manager here at BVR. Our webinar today is Reaching an Equity Price with DealStats, a case study, with Adam Manson and Oday Merhi. Before we begin, I'd like to remind you that your attendance today is eligible for 2 CPE credits. To receive the credit, you must answer 6 poll questions that will appear during this webinar, and you must complete and submit a brief survey within 5 business days. A link to that survey is included with your login email. It's also available on the event page for the program. At the conclusion of today's program, you'll automatically be directed to that survey. If during the webinar you have any trouble with the audio streaming, please try refreshing your screen to fix that issue. If you're registered as an additional listener, you must be on your own device so that you can respond to the questions and qualify for CPE. We'll take all questions for our presenters using the Q&A chat function on the side of your screen. Again, to receive your CE credit for today's webinar, you must answer 6 questions that will appear at random times during this presentation. Now I'd like to introduce today's speakers. Adam Manson is the Chief Data Officer here at BVR, where he manages the various financial data products, analytics, and tools BVR offers. He has led the development of various platforms and tools, including DealStats, BVR's flagship offering, the Guideline Public Company Comps tool, and the Economic Outlook Update, among others. He holds a bachelor's degree in finance from Seattle Pacific University and an MBA from Portland State University. Oday Merhi is a valuation data and analysis manager at BVR. He works on revising income closed deal transactions that are sourced from the middle markets, as well as researching the Securities and Exchange Commission and other exchanges for publicly available M&A information. He holds a Bachelor's of Science in Finance from Portland State University and is pursuing his Master's of Science in Financial Management from Boston University. Our speakers' full bios can be found on the webinar presentation page as well. With that, I'll turn this over to you both. Have a great presentation.
All right, thank you, Amanda, and thank you everyone for joining us here today. Starting off with, we're gonna start off things off with talking about today's agenda. In today's presentation, we'll have a brief introduction about the DealStats platform and cover some of its notable features, where we'll take a deep dive also into the composition of the information within the platform, and we're going to share some interesting details and summary statistics on some of the findings that we have. And in the platform itself, there is information on the deals that we gather are deals that can either be asset sales or stock sales. And we're going to talk briefly about the differences between those and how to approach those in the presentation. And also, the presentation will hold a section regarding a case study, of which an analyst will, an in-depth case study on how to approach deriving an equity value for a subject company. And we're going to walk through about five different scenarios that will be based on different judgment calls that an analyst might take into consideration. And also, if time allows, we're going to actually dive into the platform itself. We're going to do a demonstration of the platform to cover the various features that we're going to be talking about in today's presentation, from the Pure Play MVIC that we're going to talk about here soon, transaction types, buyer-seller types, purchase price allocations. And also, we're very excited today to share with everyone a sneak peek of DealStats' new research and data assistant, which is essentially an advanced AI research analysis assistant. So please stick around till the end of the presentation so we can show that exciting new feature for everyone. And we're going to talk a lot about how you can benefit from that new exciting feature as well. Now, starting things off, the DealStats platform is a transactional database that currently has information on over 54,000 transactions, where for each individual transaction that is researched and inputted in the platform, each individual transaction is researched very thoroughly, holistically. We gather many data points for every transaction that goes into the platform. So we gather up to 212 data points per transaction that is inputted within the platform. which some of that information includes, but not limited to, of course, information on financial statements, historical forecast financial statements, details on the consideration information, details on essentially the multiples themselves, the valuation multiples themselves, and the various financial ratios from liquidity ratios, profitability ratios, and so on. The platform itself is updated on a daily basis. So if, let's say, for example, some new transactions were researched today, they will essentially be available to everyone immediately next day. And for every transaction that is inputted within the platform, every transaction goes through a thorough multi-analyst review process to ensure quality control for all of our users. The platform itself, within for every transaction that is researched and included in the DealStats platform, it is assigned both an NEICS code and an SIC code, essentially two different industry code systems, both which are assigned to each individual transaction. Some users might have the preferential use of NEICS codes, some may have preferential use of the SIC codes. But in whichever code you choose, we have very good coverage across both. As of today, we have coverage across 968 NEICS codes as well as 897 SIC codes. So a very wide industry coverage within the DealStats platform. The platform itself also also allows users extreme flexibility when it comes to their research and analysis. It offers you the ability to look through the platform by not just a handful of fields. Rather, it allows you to essentially slice and dice the platform using all the fields that are available. So if you are looking for something very specific, if you're looking for something more general, you have the ability to do, you have the ability to tackle each of those assignments, whether very specific or very general. Each transaction within the platform comes with a transaction report that essentially shows you the holistic details of the platform, of the deal itself. So rather than going through a grid system, each transaction is presented. Each transaction has a transaction report that essentially gives you a nice snapshot of the transaction holistically, so you can see all the details from details on the target, details on the consideration, the financials, and everything. And we're gonna walk through an example here very soon. The platform also gives you thorough statistical summaries on the valuation multiples and the financial ratios. And with the platform itself also comes a quarterly 33-page publication called the DealStats Value Index that essentially looks at the entire database and presents the information in various different ways. So, for example, within this 33-page quarterly report, there will be summary information on valuation multiples by industry, by time, by acquirer type, by target type, and various other observations as well. The DealStats platform also has an API available. So if you are looking to incorporate DealStats information within a third-party application that you're currently working on, the API capability is available if that's something that you are interested in. Many of our users tend to ask us, what are our main sources for essentially the deals that go into the platform? And to that, the answer is, three main sources. Starting off with our contributor network, which is essentially a network of professionals, business brokers, M&A advisors, investment bankers, private equity groups. It is a network that has been developed over time, relationship building that BVR has done across 30 years of professional development, and that is by far essentially one of the or is our one is our largest source. Excuse me. About 80 to 85% of the transactions within the database come from that source. And also adding to that, the information, or sorry, the individuals within our network are not limited to one geographical location. We have people within our network that come from various countries, such as United States, Canada, the United Kingdom, Australia, and various other countries. But those are going to be some of the larger countries that are part of our network, with the U.S. being at the top of that list. Our second main source of the transactions is the Securities and Exchange Commission, Edgar database, where we research 8Ks, 8Kas, 10Qs, 10Ks to find transactions, acquisitions, mergers that have happened in the public markets, and that information is included within our platform. And finally, SEDAR, which is essentially the website that is the Canadian equivalent to the Securities and Exchange Commission in Canada. And when it comes to that source, we research the business acquisition reports, the audited financial statements, the interim financials, to also gather information when it comes to acquisitions and mergers and acquisitions within the Canadian markets. In the platform itself, the user has the ability to, from all the information that we talked about, one also very important component within the various bits of information and for every transaction in the database is the purchase price allocation. And purchase price allocation information is presented to our users in two main forms. On the right-hand side, you will see essentially a grid, and essentially that's how you can that will be through the Excel download. When you pick your comp set and download your information via Excel, you're able to view the purchase price allocation information via Excel within that format that is presented here on the right hand side. And on the left hand side, that's going to be how the purchase price allocation is presented to our users within that thorough transaction report that we previously talked about. And we are going to look at an example here fairly soon. But that information is presented to all of our users. And the importance of this information comes in connection to this following question, or potentially other questions as well. But this is a very common question that comes by. Essentially, many of our users ask within the DealStats platform, is inventory included in the selling price? And the answer to that question is, depending on what you're dealing with. Are you dealing with a stock sale? Are you dealing with an asset sale? It might differ. And in the profession, there are rules of thumb that we tend to follow. And let me just talk a little bit about those rules of thumb. When it comes to stock sales, the assumption is that the entire legal entity has been transferred over to another person, and within that transferred all of the assets and all of the liabilities. So you might make the assumption that yes, inventory was included if this was an inventory heavy business, right? And if we are dealing with asset sales, the general rule of thumb is, within our industry, the general rule of thumb is that generally inventory does transfer, generally fixed assets do transfer, and generally intangible assets do transfer. That being said, these rules of thumb is something that we follow, but they may not be, they are not correct 100% of the time, and therein comes the power of observing and looking through the purchase price allocation information to determine exactly what assets have transferred within the transaction. And here's a quick example at looking at a comp set from within all these transactions are in the same industry. This is a comp set for transactions where we're looking at their purchase price allocation information, and we see from the purchase price allocation information within the data set, or within this example, is that inventory transferred in many of them, but not all of them, right? So for those which have not had inventory transferred, how do we go about taking that into consideration? How do we go about making adjustments if you want to make adjustments for essentially coming to that final equity conclusion. How do we go about those things? But before we talk about that further, which Adam will discuss here soon, it's important to vocalize the importance of the purchase price allocation information. Again, the rules of thumb are there to guide us, but if the information is there, then that is the concrete evidence that you would need to take the next steps of your analysis. And here is some summary information that we have gathered regarding the retail sector within the DealStats database, where essentially we took all the transactions that are in the retail sector that have a purchase price allocation available to analyze what are some of the assets that actually, how often did certain assets actually did transfer, depending on which type of sale, right? So for the retail sector, where a purchase price allocation was present in the DealStats platform, if we're looking at asset sales, we observe that 76% of the time inventory does transfer. And also, if we were looking at stock sales, 85% of the time inventory does transfer. But again, with that rule of thumb in mind, here is information to state that rule of thumb is not 100% correct. Is not correct 100% of the time. So if the information is available for us to observe and for us to analyze, it is important for us to look at that first before we further out our analysis. And in the DealStats platform, a user, at any point in time while they're looking for comps, they might be dealing with different, essentially, acquire target compositions, if you will. So, at any point in time, you might be dealing with private-to-private transactions. You might be dealing with public-to-public. You might be dealing with private-to-public, public-to-private transactions. And depending on those transactions that you're dealing with, if you're specifying that these are the types of transactions that you're going to be working with, will determine ultimately what type of transaction type you're going to be working with, right? So some analysts want to stick to private transactions. Some analysts want to broaden their searches and include other deals. They don't mind including that in their analysis, but it's important to see that depending on which composition you're working with will determine what type of transaction type you're going to be dealing with. So, for example, in this table right here, if we're looking at private-to-private transactions, which accounts for 73% of the database, 94% of the time, if those are the transactions that you're explicitly wanting to deal with, 94% of the time, those are going to be asset sales. So that will determine the next steps and your workflow and your approach to finalizing and deriving that equity value when you're, after you have applied those multiples. And similarly, if you were working with other acquired target compositions, there will be other things to take into consideration to come to that final equity conclusion, because now you're going to be dealing with stock sales. The likelihood of you including stock sales within your comp set would drastically increase if you were to look at different compositions. And here's just a visual representation of that information. So again, if you were dealing with private-to-private transactions, then most of the time, expect that you're going to be working with asset sales. And if you're going to be working with any other composition, when it comes to that acquired target composition, then the likelihood of transaction types you're going to be dealing with are going to be stock sales. So that's going to change the way that you're going to be approaching things. Many of our users may not take that composition into consideration. Rather, they might just stick to the target type itself. So here's just also another quick analysis on, if you were just concerned about the target type itself. If you're going to be looking at simply private targets, 82% of the time you're going to be dealing with asset sales. And if you're going to be dealing with if you're going to be including public targets in the mix, then most likely, 96% of the time you're going to be dealing with a stock sale rather than an asset sale. And here's a visual representation of that as well. Again, if you're choosing explicitly to deal with private targets, then more than likely you're going to be dealing with asset sales. So maybe there's a certain workflow that you're gonna go through, and Adam is going to demonstrate potentially what that workflow might be, something that you might take into consideration if you were to deal with such a mix. And again, if you're dealing with public targets, then most of the time you're going to be dealing with stock sales. And with that being said, I'm going to go ahead and move it over to Adam Manson to continue the second portion of our presentation.
All right. Well, thank you so much, O'Day. Before we continue, we have a couple questions. So let's just go ahead and address some of those. So the first one here is asking so we already classified transactions using both the NAICS system and the SIC system. They're asking if we'll also use the Global Industry Classification System, or GICS. So right now, we don't have any plans to do so. GICS is proprietary. It requires a license. So that's not currently something that's on our radar or that we've received a lot of requests for. But if it's something that you're looking for, reach out. We'll definitely take note of that, and add it to our list of considerations. We have a couple questions here, which are asking about what's an API. I think that was back from the start of O'Day's portion where he was talking about that's available for accessing DealStats information. Essentially, it's a system to go out and call in information from DealStats if you're developing a tool, an app, or piece of software without actually having or accessing the DealStats platform. So if that's something you're interested in, if you're developing something along those lines, definitely reach out to us. And happy to talk more about it. Another question here is asking essentially if inventory transfers and it's included in the purchase price allocation, is it 100% of the target's inventory, or are there some instances where maybe it would be some but not all of the inventory? I think from what O'Day and I have seen, generally when we have transferred inventory in the purchase price allocation, it is the entire inventory of the target. Could it be something less? Maybe if the target had, maybe excess inventory potentially. I don't think that's common. Last question here. It basically is asking if there is inventory included in the purchase price allocation that they're viewing, I guess, for the transaction, and they're looking at the selling price. Is that amount of inventory included in the selling price? And that is correct. So if you're seeing an asset in the purchase price allocation, those values will be included in the selling price. So anything you see in the purchase price allocation will be in the selling price of that target.
Absolutely.
All right. So here we go. All right. So O'Day talked a little bit about whether we're going to see predominantly asset sale transactions or stock sale transactions based on whether we're looking at the data by acquirer type, buyer type, or both. But what about some other metrics that, say, users of DealStats commonly search for? Will we get more asset or stock sale transactions based on some other common filter criteria? So here we're looking at transactions based on size. So we're looking at transactions based here on the selling price of the business. So on the left, we have the ranges and selling prices of the companies, the DealStats data set. So we have 0 to 1 million, 1 to 5 million, et cetera. You can see them here. And we can see that for the smallest companies in the database, so those that sold for $1 million or less, what we might consider to be Main Street businesses, nearly all of those transactions are asset sale transactions. So 97% of those transactions are asset sale transactions. And as we look at these different selling price ranges, so as the size of the company increases based on selling price, we can see that the percentage of asset sales declines and shifts over to stock sale transactions. And then once we get to the largest transactions in the database, so those companies that sold for $100 million or more, we can see that the vast majority of those transactions are stock sale transactions. And if we look at that information here on this graph, we can see that, yes, the smallest companies in the database based on sale price are asset sale transactions. And as we start to move to larger companies based on their selling price, the percentage of asset sales declines. And once we get to that grouping, that's about $5 to $15 million in the selling price, the mix of asset and stock sales is pretty evenly split. we're looking at a pretty close range of about 50 to 50%. But then the percentages diverge, where as we continue to look at larger firms, we'll see that predominantly we'll be working with stock sale transactions if this is something that we're searching by. But what about another size measure? What if we look at revenue instead of selling price? So here we're looking at the same ranges as we did in the selling price table, only this time we're looking at revenue. So we have 0 to 1 million, 1 to 5 million, and so on. And we're seeing a very similar trend to what we saw with the selling prices, which is for the smallest companies here measured by revenue. So those with revenue of $1 million or less per year, almost all of the transactions are asset sale transactions. And as we look at larger firms, based on their sales, their revenue, we can see that the percentage of asset sales declines and the percentage of stock sales increases. And again, as we get to those largest companies, the vast majority of these companies based on revenue, are stock sale transactions. And here, just taking a look at that information on a graph, we see very similar trends to what we saw when we measured size by the selling price of the companies. We can see that the smallest firms in the data set are predominantly asset sale transactions. Based on revenue or asset sale transactions. And as we look at larger companies based on revenue, the percentage of asset sale transactions declines, the percentage of stock sale transactions increases. And then once we get to the $5 to $15 million revenue range, it's pretty evenly split between stock and asset sale transactions. So if you're looking for companies that are within that size range based on revenue, you're going to have a potentially pretty comparable mix of stock to asset sale transactions. But as you start to look for larger firms, you'll find that the majority of your comparable companies will most likely be stock sale transactions and fewer will be asset sale transactions. All right, so what if we look at the data set based on profitability? So here in this table, we're looking at operating profit margins for the companies in the DealStats database, and we have the percentage of asset and stock sale transactions for these different categories here. And when we're looking at just companies with negative operating profit margins, so those that have negative operating profit, we can see that this data set is pretty close to being split down the middle between asset and stock sale transactions. But as we look at companies based on profitability, and as they become more profitable, the data set tends to skew more towards asset sale transactions and away from those stock sale transactions. And I think some of this goes back to what O'Day was talking about during his part of the presentation, where the majority of the transactions in the database are private to private transactions. That is the majority of the data set. The majority of those transactions are asset sale transactions. And if you remember when he was showing that chart earlier, those are generally financial purchases. So you have someone buying a company based on some earnings metric, whether it's SDE or EBITDA, whereas the other buyer and seller types tended to be stock sale transactions. And if you remember from that chart, many of those are strategic, so not necessarily being acquired based on some kind of earnings measure. That's maybe why we're seeing this evidenced in this profitability chart here. And if we look at it on a graph, we can see, when we're looking at companies with negative operating profit margin, so we're not considering buyer type, we're not considering target type or size, just based on operating profit margin, the data set is pretty closely split down the middle between stock and asset sale transactions. But as we look for companies with increasing profitability based on these ranges here of operating profit margin, the majority of the data set moves towards asset sale transactions and away from stock sale transactions. All right, so we've been talking about whether we're more likely to see asset sale transactions or stock sale transactions based on searching by buyer type, target type, size, profitability. But why do we care? Why are we making this distinction between asset and stock sale transactions? And the reason we do is that certain things generally transfer in asset sale transactions and certain things generally transfer in a stock sale transaction. And based on what's included in the selling price, when you calculate the multiple from that transaction and you apply it to your subject company, that's going to give you an indication of value that's going to represent that transferred bundle of assets. So if we're looking at different companies where different things transferred, it's important to make a distinction between whether it's an asset sale or stock sale and what generally transfers in these sales, because it's going to sort of govern our add backs and deductions to get to an equity value after we apply the multiple. So if you do a search in DealStats, or you have another data set and you have a mix of asset sale and stock sale transactions, what are some things you could do with this comparable company set? And granted, there's many things that you could consider. A couple things you could consider would be maybe separating the asset sale transactions and the stock sale transactions into two separate groups, applying the multiples independently. Certainly something you could do. If you have the majority of one transaction type, so maybe you have 20 comparable companies, 18 of those companies are asset sales, 2 are stock sales, you could consider maybe removing the stock sale transactions. Definitely something you could consider. Another thing you could consider is converting those stock sale prices to asset sale equivalent prices. And to do so, you just would be thinking about the differences in the selling prices of your stock sale transactions based on your asset sale comparable companies, and then reconciling those stock sale prices to make them comparable, right, to your asset sale transactions. So for example, in an asset sale, we've talked about inventory, fixed assets, and intangibles generally transfer. Cash, accounts receivable, generally don't. You can see this in the purchase price allocations of the comparables you're working with, but in your stock sale transactions, you probably will have transactions where cash and accounts receivable were included in the selling price. So if you're trying to make that selling price comparable to your asset sale transactions, you'd back those values out, looking at and based on the purchase price allocation. And then any other asset that would be in addition to inventory, fixed assets, and intangibles that your specific stock sale comparables have. And again, just a reminder, we include the value of assumed interest-bearing debt in the stock sale MVIC price, but it's still net of non-interest-bearing liabilities that were assumed by the buyer. So because that selling price for those stock sale transactions is net of that amount, you'd be adding back those assumed non-interest-bearing liabilities to make that selling price comparable to those asset sale transactions. And then, of course, any adjustments you do to the selling price, you're going to want to remember to recompute the multiples using the selling price that you've just adjusted. And another option, too, is you can use the Pure Play MVIC prices and multiples, which are included in DealStats. And these are relatively new. We started incorporating these towards the end of last year. And what these do is they provide a value of fixed assets and intangibles for your comparable companies. So whether you're working with a set of asset and stock sale transactions all together in your comparable company set, the MVIC price, the Pure Play MVIC price for each of those will only include the fixed assets and intangibles of that comparable company. It doesn't include inventory. It doesn't include anything else, just those assets. Or like if you saw what O'Day was presenting earlier, where he was looking at an industry and we saw a set of asset sale transactions, and then almost all of them had inventory included, but there was a couple that did not. If that's your comparable company set, this reconciles those inconsistencies where you just have the value of fixed assets and intangibles for that comparable company set. And then from there, you add back the values of the assets your subject company has, in addition to fixed assets and intangibles. So cash, you're adding it back. Accounts receivable, you're adding it back. Everything else, you're subtracting all liabilities if you're working to an equity price. So something that you could consider using and tap into. It's available in both the platform and the Excel export, in addition to the standard selling prices and the standard multiples that are computed off the standard selling prices. Just to note, the differences that we're talking about between asset and stock sale transactions, or even just differences among the same transaction type where things aren't always the same, they're not distinct or unique to DealStats. We're capturing transactions, that occur at the SEC website, at CDAR. We're working with M&A advisors and business brokers, and we're documenting the transaction type and what transfers and at what value. But transactions aren't all the same. So what we're talking about here is not just applicable or specific to DealStats, but to just transactions and other data sets as well. But one thing that we want to point out is that we're attempting to provide as much information as possible where we can. So if you want to make these adjustments, if you want to reconcile any differences, you have the ability to do so. And that's really our goal and our aim with the data and the information that we provide. All right, well, so just to quickly summarize, what we looked at so far, we notice that, yes, inventory generally transfers in both asset and stock sale transactions, that private companies or individuals buying other private companies in the database are generally asset sale transactions. All other buyer seller types in DealStats are generally stock sale transactions. We look at companies based on size, whether it was the selling price or revenue. When we're about at the $5 to $15 million range, it's pretty close, approximately equal asset to stock sale transactions. Below that, mostly asset sale transactions. Above that, mostly stock sale transactions. And as we look at companies based on profitability, those unprofitable companies pretty evenly split between the two transaction types. But as we look at increased profitability or companies or groups of companies that are more profitable, they tend to move towards asset sale transactions and away from stock sale transactions. All right, so now we're going to walk through a case study where we're going to have a set of comparable companies. We're going to have some asset sale transactions and some stock sale transactions, and we're going to use the data and apply it to our hypothetical subject company to come up with an equity price for the hypothetical subject company. We're going to look at 5 different methods, an analyst could consider. And granted, there's more that you could employ. I'm sure if you want to maybe share some of what you're doing, to reconcile differences or in the comparables you're working with, if you want to share that in the Q&A, we can, read some of that later. But what we're going to do is we're going to walk through 5 different potential methods that we could use this comparable company set. And then at the end, we're going to look at the results that we get after we've gone through the 5 methods. Are they the same? Are they different? Are they comparable? And we're just going to kind of go through all of that. And then afterwards, we'll talk about some of the pros and some of the cons as we see it from each of the different methods. Okay, so here are the 5 scenarios we're going to walk through. So the first scenario is we're not going to adjust any of the selling prices. We're going to have stock and asset sale transactions. The majority are asset sale transactions. We're just going to apply the multiple. So we'll take some measures of central tendency from the data set. We're going to apply the multiples to our subject company. And then because the majority of the comparables are asset sale transactions, we're going to use our asset sale add back template to work to an equity price. The second scenario, we're going to remove the stock sale transaction. So we're just going to separate them. And you're going to see there's one asset sale transaction that's different than the others. We'll make an adjustment for that guy as we go through that scenario. And then what we're going to do is we're going to apply the multiple from those asset sale transactions to our subject company and use those asset sale add backs. In the next scenario, scenario 3, we're going to separate the stock and asset sale transactions into 2 different comparable company groups. So we're going to have each of those as their own comparable company group, and then we're going to use the multiples independently, and then we're going to apply them to our subject company and reconcile the results of the 2 different comparable company sets. The fourth scenario, we're going to adjust our stock sale prices to an asset sale equivalent price. We're going to recalculate the multiples for those stock sales, and then we're going to use them in conjunction with our asset sale transactions. So we're using our stock sale transactions and our asset sale transactions together with adjusted stock sale prices. And then because everything will be either an asset sale or asset sale equivalent price, we'll use our asset sale add backs. And then in the final scenario we're going to walk through, we're going to use the Pure Play MVIC prices and the Pure Play MVIC multiples from our transaction set. And we're going to use our Pure Play add backs to get to an equity price for our subject company. All right, so here are the comparable companies that we're going to be working with. So you can see here, we have comparable companies A through L. The first 8 are asset sale transactions. The final 4 are stock sale transactions. And if we look at the asset sale transactions and we look at the purchase price allocation, we can see, as we would expect, none of them include cash. If we look at inventory, as we would expect, we can see, yes, our asset sale transactions here do include inventory. But we do have that one transaction, which is transaction B or comparable company B. And that has a value for accounts receivable on the purchase price allocation. If you remember from Adobe's presentation, this isn't common. I want to say for the retail industry, he was looking at maybe it was like 3% of transactions or 2% of transactions, but it happens. So that one's going to be a little bit different than the other asset sale transactions, and we're going to account for that. Once we get to transactions I through L, we can see these are all stock sale transactions. For the first two, we can see we have a purchase price allocation, and we have values for cash, AR, and inventory. For the final two stock sale transactions, so in this hypothetical set of comparable companies, for some reason, these two transactions don't have purchase price allocations. Generally, the stock sale transactions and DealStats do have purchase price allocations, but maybe you'll run across some that don't. But in this case, we'll have the balance sheet, which is common for a lot of stock sale transactions, and we'll use the values in the balance sheet as a proxy for some of these assets, around the time of closing. Then here at the bottom, we have some information about our subject company, our hypothetical subject company we'll be working with. So here, this company has EBITDA of $400,000. We have a value for interest-bearing liabilities, non-interest-bearing liabilities, and then some other values for assets as well. And we'll be using this as we go through some of our scenarios just here in a second. All right, so here's our first scenario. So here's a scenario where we're not going to make any adjustments to any of our selling prices. So we're just going to go ahead and take a harmonic mean, a median, and an average of the EBITDA multiple from our comparable company set. And of course, you could use a different multiple. You could use several or more multiples, just to kind of make things straightforward and kind of streamline just walking through this. We're just going to be looking at the EBITDA multiple from our comparables. Okay, so after we've calculated our harmonic mean, our median, and our average from our EBITDA multiple from our comparable companies, we apply this to our subject company's EBITDA, which again, from the prior slide is $400,000. This gives us a value indication from each of our three multiples. All right, and then because we're saying, well, the majority of the transactions were asset sale transactions, we'll use the common add backs that you would when you apply an asset sale multiple. So we're adding our subject company's cash back, which from that one slide, remember, is $50,000. We're adding back our subject company's accounts receivable, which is $85,000. Anything else that our subject company has in addition to inventory, fixed assets, and intangibles, we're going to be adding back. To simplify things, we're just going to say nothing else, but this is where you would add that back. And then we're subtracting all liabilities, all of our subject company's liabilities, which gives us an equity value indication from each of the multiples that you can see here on that equity value indication row on the screen. And we're just going to take an average of these three values, what gives us, just between 1.4 and 1.5 million. Okay, so here is our second scenario. So we have our same comparable company set. And this time we're going to take those stock sale transactions and we're not going to use them. So what we're going to do is we're just going to pull them out of our comparable company set and just use the asset sale transactions. And like we identified here, we have transaction B, which is a little different than the other asset sale transactions. So this asset sale transaction has accounts receivable included in the selling price. So we're going to want to make an adjustment for that to make it comparable to our other asset sale transactions. Okay, so here we have the company's selling price, we have its EBITDA, and we have its multiple of 3.4 times. But we know that accounts receivable of $95,000 is included in that selling price, and as a result is also included in that multiple. It's not included in the selling price of our other asset sale transactions or in their multiples, so we need to make an adjustment here. So what we're going to do is we're going to subtract that value for accounts receivable. We're pulling it out of the selling price. EBITDA remains the same, and we have a new selling price of 3.5 million, and we have a new MVIC to EBITDA multiple of 3.2 times. And this effectively gives us an accounts receivable PPA value of 0, right? Because the 95,000, it came out of the selling price. It also came out of, our AR PPA field. So we now have a selling price and a multiple that's comparable to our other asset sale transactions. So once we've done this, we can bring transaction B back to our comparable company set. Okay, so we have transactions A through H. Again, we have transaction B. We can see it has its adjusted selling price, right? It's lower now by $95,000. That selling price is now 1.35 million. We also see that we have the adjusted EBITDA multiple now, right? Because we have to recalculate it. So we have the adjusted EBITDA multiple for comparable B of 3.2 times. Everything includes now inventory, fixed assets, and intangibles. So we'll go ahead, we'll take our harmonic mean, our median, and average of the EBITDA multiple for these comparables. And then once we have that, we're going to apply it to our subject company's EBITDA. So this is giving us a value indication of inventory, fixed assets, and intangibles after we apply the multiple. Anything else that our subject company has in addition, and these are our, asset sale add backs, anything else that our subject company has in addition to inventory, fixed assets, and intangibles, we're going to be adding back. So in this case, we're adding back our subject company's cash. We're adding back our subject company's accounts receivable. Anything else, right, in addition to inventory, fixed assets, and intangibles, we're adding back. And then we're going to subtract all of our subject company's liabilities, so both interest-bearing and non-interest-bearing. And this is going to give us an equity value indication from each of our three multiples. If we just take an average of those three indications, we get 1.2 or just over 1.2 million. All right, so here we are on scenario 3. And this is the scenario where we're going to subtract, or we're going to separate our asset and stock sale transactions. So we have asset sale transactions, we have stock sale transactions. We're going to separate them, and then we're going to apply the multiples independently. And you can see here, 2/3 of our comparable company set are asset sale transactions, 1/3 are stock sale transactions, and those are going to be the two different comp sets we use. Okay, so here you can see on the left, we have all of our asset sale transactions, and on the right, we have all of our stock sale transactions. And just to note, transaction B, so comparable company B, that asset sale. So we have the adjustment for accounts receivable already made. You can see the selling price has been adjusted. You can see we're using the new multiple of 3.2 times. So just to know, we've made that adjustment. We don't need to walk through it again, but it's been done here to make our asset sales comparable amongst each other. All right, so we're going to go ahead and take the harmonic mean, the median, and their average from each of these two sets of comparables independently. So we have our multiples for our asset sale transactions. We have our multiples from our stock sale transactions. And then we're going to go ahead and apply these to our subject company. Okay, so first we'll go ahead and use the asset sale multiples. So we're applying the harmonic mean, the median, and the average to our subject company's EBITDA like we did in the prior scenarios. And this is giving us a value indication for our subject company from each of the multiples. And we know that the value indications include inventory, fixed assets, and intangibles. And now we're adding back any assets our subject company has, which are in addition to inventory, fixed assets, and intangibles. Again, we know based on that slide, our company's got cash, it has accounts receivable. If it had anything else, we'd be adding it back. We know it has liabilities of $360,000, so we're subtracting that out. And that's giving us an equity value indication for each of the multiples, where if we take an average of that, we get 1.2 or just over 1.2 million. All right, so here we have the multiples from our stock sale transactions. And we know from the slides we saw earlier, this is including generally all the assets of the business. It has the value of interest-bearing debt added back to the price. It's still net of non-interest-bearing liabilities. So we're applying these multiples to our subject company. That gives us a value indication there. From there, we know that it has all of our subject company's inventory and accounts receivable and everything else included. It's already net of interest-bearing liabilities because that's subtracted, right, in stock sale price. So now we're subtracting debt, our subject company's debt, to get to an equity value indication from each of these multiples. And once we take an average of those three values, we get just over 1.9 million. If we average this result with the result we got from the asset sale transactions, that gives us almost 1.6 million for an average equity value. And granted, you could do a weighted average. I know we said that the data are 2/3 asset sale transactions, 1/3 stock sale transactions. You could take a weighted average. We looked at it. It wasn't drastically different. It might be based on your comparable companies, but it's up to you how you do that reconciliation. All right, so here is the fourth scenario. So here is the scenario where we're going to take our stock sale transactions, and instead of getting rid of them, and instead of using them as a separate comparable company set, we're going to adjust their selling prices to make them comparable to our asset sale selling prices. And we know that our asset sale selling prices include cash. Our asset sale transaction prices do not include cash. They don't include accounts receivable. They only include inventory, fixed assets, and intangibles. And we're going to make an adjustment so that they're comparable with those asset sale transactions. So first, we're going to start with the selling price as it is for these four comparables. So here we have the actual selling price for these four transactions. And we know that our asset sale transactions do not have cash in their selling price, but we can see based on the purchase price allocation, or in lieu of a purchase price allocation, using the comparable's most recent balance sheet as a proxy, we have values for cash that either transferred or that we assume have transferred. Not the case for our asset sale transactions, so we need to make an adjustment by subtracting that value from the stock seller price. We also know that our asset sale transactions do not have accounts receivable included in their selling price, therefore not in their multiples. And we can see that in the transactions we have, I and J with the purchase price allocation, we know that accounts receivable transfer in the exact amount. For K and L, we're assuming that because most of the time accounts receivable are included in a stock sale transaction, all assets, we're going to use the balance sheet as a proxy in the absence of a purchase price allocation, and we're going to subtract that value out. So we're essentially going to look at the purchase price allocation, and if we don't have one, we'll look at the balance sheet. And then for any other asset that our stock sale transactions have, either in the purchase price allocation or balance sheet that are in addition to inventory, fixed assets, and intangibles, we're going to subtract that out. Here, we just lump that all together in a other line. So that's just everything else. And we know that, the selling price already includes interest-bearing liabilities that were assumed by the buyer because we add that back. It's included in the stock sale price. But we know the selling price is net of assumed non-interest-bearing liabilities. We know that's not the case with our asset sale comparables, so we're adding that value back. So once we've kind of gone through those add backs, those deductions, we have basically converted stock sale prices that approximate an asset value equivalent, right? Comparable bundles to our asset sale transactions. And that's what we're going to go ahead and use in conjunction with our asset sale transactions. All right, so here we have what we started with, which are 4 stock sale transactions. We have their selling price, their EBITDA, their multiple, but then we have their new converted price. So they now have a selling price that's an asset equivalent price. EBITDA, for the comparables remains unchanged. So we just go ahead and we recalculate the multiples using the new price that we just adjusted for. And that gives us that new set of multiples we see over in that far right column. All right, so we can now bring those transactions back and we can use them in conjunction with our asset sale transactions. So here we have our entire comparable company set. So we have all of our asset sale transactions. We have our stock sale transactions, which are now have an asset equivalent price, right? Recalculated multiples. And what we're going to do is we're going to again take the harmonic mean, median, and average of the EBITDA multiple from the entire comparable company set. Okay, so once we have those 3 measures of central tendency that we've calculated based off the EBITDA multiple of our comparable companies, we're going to go ahead and apply it to our subject company, which has EBITDA of $400,000. And this is, again, giving us a value indication from each of the 3 multiples, which is going to include inventory, fixed assets, and intangibles. Anything else that our subject company has, such as cash, accounts receivable, anything else, we're adding that back. Then we're going to subtract all of our subject company's liabilities in order to reach an equity value indication for our subject company. So here we'll have the 3 equity value indications for our subject. If we take an average of those, we have $1.4 million. All right, so here is the final scenario we're going to take a look at. So this is looking at the Pure Play MVIC price for our comparable companies. And again, remember that is the value of the fixed assets and intangibles of our comparable companies. So the value of fixed assets and intangibles for each transaction. That's all it includes. It doesn't include inventory. It doesn't include anything else. There's no deduction for liabilities. That's what the Pure Play MVIC is. And the Pure Play MVIC to EBITDA multiple is just the EBITDA multiple calculated off the Pure Play MVIC as opposed to the reported company's selling price, which would be the standard MVIC. So that's what we're going to look at here in this scenario. So here we have all of our transactions together, asset and stock sale transactions, and we have both their Pure Play MVIC price and the Pure Play MVIC to EBITDA multiple. And we don't have to separate the companies. We don't have to make any adjustments because we're looking at a selling price, which only includes fixed assets and intangibles for each of our comparables. And then we're using a multiple, which is only providing a value indication of fixed assets and intangibles. So there's no other adjustments to be made. We're just using the multiple as it is. And we're taking, again, the harmonic mean, the median, and the average for the EBITDA multiple of this comparable company set. Okay, so we're going to apply that harmonic mean, that median, and that average to our subject company. So again, this is giving us a value indication of fixed assets and intangibles for our subject company. So anything else that our subject company has that is in addition to fixed assets and intangibles, we're going to be adding back. So if you remember from that one slide, our company has cash, we're adding it back. Our company has accounts receivable, we're adding it back. We're adding back its inventory. And anything else that we have, we're going to add it back as well. And then we're going to subtract all of our subject companies' interest-bearing and non-interest-bearing liabilities to get to an equity value indication for each of these three multiples. If we take an average of those three values, we get just under 1.4 million. Okay, so we looked at the data and we looked at 5 different ways we could use the comparable companies with our subject company. And we might be wondering at this point, did we get different results? So here's a table that just shows the 5 different scenarios that we walked through. And it shows the indicated equity value that we came up with based on our, comparable companies, our hypothetical subject company. And we can see that we do get some different results. Some are higher than others, some are lower than others. So we did get some different results. So you might be wondering, well, are there any benefits or drawbacks or anything to think about or be concerned with as we look at maybe using some of these different scenarios? So let's look at maybe some pros and cons as we see them with these different scenarios. So that first scenario, that was the one where we didn't adjust any of the selling prices. So we had stock sale transactions, we had asset sale transactions, we used everything together, we made no adjustments. We had that one asset sale transaction that had that accounts receivable value that transferred the selling price, didn't do anything there. So what is a benefit to using this method? Well, one thing that I think is pretty apparent is it's fast and straightforward. Essentially, we can go through and just calculate our measures of central tendency and apply them, and it's pretty quick. But I think one thing you all probably know, at least based on the presentation that we walked through, is that we didn't account for any of the differences in the transaction types. And as we discussed, asset sale transactions and stock sale transactions are different. They include different bundles of assets and or liabilities, and applying the multiple provides a value indication that will be different based on those selling prices. So if you mix all of this together, you have your stock sale transactions, your asset sale transactions, you haven't really done any reconciliations to adjust things. Once you've applied the multiple and you have a value indication, what are your add backs to get to an equity value? What do you deduct? It's not clear. You don't have a clear path. And that's definitely something that if you're working to an equity value, you might want to think about. So scenario 2, that was the scenario where we removed the stock sale transaction. So we said, you know what, let's just not use them. We're just going to use our asset sale transactions. We did adjust that one transaction that was different. If you remember that comparable company with the accounts receivable. So we did adjust that there, but we only used the asset sale transactions and we applied those multiples to our subject company. So again, like scenario 1, this is also fast and straightforward. It didn't take much time. And also 2, it has the benefit is that we didn't mix transaction types. So we didn't have stock and asset sales commingled. We had one transaction that was different, but we accounted for that. And as a result, once we applied the multiples that we took, right, the harmonic mean, the average, the median, we knew what we had to add back and subtract to get to an equity value. It was clear because we understood what that value indication captured and what it represented. But I think maybe a negative to this scenario is that we removed some of our comparable company sets. So, if we've gone through, we've done the analysis to determine that, hey, these companies are good comparables and I want to use them in my analysis, we just removed them and they weren't used in our analysis. So that's definitely a potential drawback and something that, we might think about, if we were to maybe employ scenario 2. Scenario 3, so that was the one where we separated the stock sale transactions, we separated the asset sale transactions, we took our measures of central tendency independently as 2 separate comparable company sets. We then applied the multiples to our subject company independently. We worked through our add backs, we got a result, and then we reconciled the 2 results from the 2 comparable company sets. And if you're thinking about the pros on this one, it's probably not as fast as scenario 1 or scenario 2, but it is straightforward. And again, just a reminder, we did adjust, that comparable company that accounts receivable. So that was done in this scenario. And also it was also done in scenario 4, just to mention that. So we only walked through it in scenario 2, but we did it in scenario 3 and scenario 4. So all our asset sales are on the same level, essentially, in terms of their price. So because we had the transactions separated between stock and asset sale transactions, and we had adjusted that one asset sale transaction where necessary, once we applied the multiples, we knew what we needed to add back and deduct to get to an equity price, right? Because we understood our value indication from the multiples. But one thing to note is that depending on the data set you're working with, what if you don't have enough of, one type of transaction? Like, so say, what if you have 20 comparables and 18 are asset sale transactions and 2 are stock sale transactions? Just taking a mean or harmonic mean of 2 transactions meaningful? It might not be. I mean, that's up to the analyst. I mean, that's up to professional judgment, but something to think about. But even if you do have groups that you feel are representative of those transaction types, or say substantial enough to be a decent comparable company set, you're going to have to determine, how do you reconcile the results from those 2 methods? Do you take a standard average, a weighted average? Do you do something else? That's going to be, up to the analyst to determine and also to, support. Scenario 4, that was a scenario where, again, we'd adjusted that asset sale transaction where necessary, but then we took our stock sale transactions and we adjusted their selling price to approximate and be comparable to our asset sale transactions. So we looked at the selling prices of our stock sale transactions and we reviewed the purchase price allocations and balance sheets, and we made adjustments to those selling prices to make those selling prices comparable to our asset sale transactions. So anything that was included in the selling price for our stock sale transactions, but was not included in our asset sale transactions, right? We were backing that out. Anything that was deducted in our stock sale prices, but wasn't deducted in our asset sale prices, right? Non-interest bearing liabilities assumed, we're adding it back, right? So we made those adjustments and we remembered to recalculate the multiples using the adjusted selling price. And then we brought them back and used them all together. So what are the benefits here? Well, this one used all of our comparable companies. So remember scenario 3, we just didn't use those stock sale transactions. The scenario 2, we didn't use those stock sale transactions. Scenario 3, we used them separately. But here we've used them all together. So our asset sale transactions, our stock sale transactions, we use them together as one comparable company group. And as a result, we didn't eliminate anything or use separately any comparables that we thought were good for our analysis. And also because we know what the selling price included for our comparables, right? We understand what is included in the value indication that the multiples produce. So we know what to add back and what to deduct to get to an equity value. So it's straightforward. It's not as, it's clear, but it's not maybe as straightforward a method as, the first three scenarios. It's certainly not as fast as scenarios 1 and 2, but it used everything together. One thing we'd want to consider though, right, is that we're going to need purchase price allocations for our target firms. Otherwise, we're going to have to rely on a balance sheet and then knowing what typically transfers in a stock sale as a proxy for actually having the provided purchase price allocation. And if we have a lot of stock sale transactions, doing this on an individual basis for every transaction, it could be time consuming, right? This could take a good amount of time. And there's always the potential that we could make a mathematical error as we're going through and adjusting these selling prices. So that's something I think to be aware of. The final scenario, that's the one where we use the Pure Play MVIC prices. So again, for all of our comparables, that represented the price of fixed assets and intangibles for that comparable company. We applied the multiples, and like scenarios 1 and 2, this is fast and straightforward. The Pure Play MVIC price is provided for the transactions. The Pure Play MVIC price to EBITDA is calculated, whether you're in the platform, whether you're in Excel, and we're going to take a look at this in the platform here in a minute. But you don't have to make any adjustments. There's nothing that you had to do to reconcile dissimilar selling prices. You have a consistent selling price for all your comparables. So it's provided, and as a result, the add backs and deductions to get to an equity value are clear because you understand what that value indication produces. And then also because the Pure Play MVIC price and the multiples are provided, they're included both in the platform and in Excel. You don't have to go through and manually make any adjustments, which potentially could lead to, maybe some actual mathematical errors, in your formulas. So something to consider though, I think with the Pure Play MVIC price is that there might be transactions in your comparable company set that don't have a Pure Play MVIC price. They only have the standard selling price. And this could be because there wasn't enough information provided for the transaction for us to produce the Pure Play MVIC price. So if this is the case, you're going to probably need to make some decisions on how you proceed if you're going to, say, use these Pure Play MVIC prices and EBITDA multiples. So one thing you could do is you could remove them from your data set. Something you could consider, it's up to you. But, if you want to use those comparable companies with your, with the remainder of your comparable companies, you might want to maybe consider something else. So if you're working maybe with like an industry that doesn't have inventory, maybe like some type of service firm, or maybe it's an immaterial amount of inventory, one thing you could do is you could assume that the Pure Play MVIC price for those comparables where it's absent would approximate, the actual MVIC price that's provided. Something you could consider. Maybe another option you could consider is that, well, for your other comparables that you have, purchase price allocations. So you have both the MVIC and the Pure Play MVIC price, and you see what level of inventory is included in their selling prices. You could maybe take an average and say, well, what's the average, value of inventory that transfers in these sales? And if we're assuming that's also transferred in these comparables as well, we could just back that assumption out of the provided MVIC price to approximate a Pure Play MVIC price. And there's also, benchmarking resources out there where you can look at, various, levels of inventory for companies in different industries, maybe something to consider, based on, balance sheets and things like that. But you'll need to make a decision if this is something you're going to do and you happen to have a few comparables that don't have this price. Okay, so what are some of the takeaways from what we've talked about so far? Well, I think one thing that's apparent is that, excuse me, understanding what's included in the selling price, whether you're using DealStats data or another data set, is important because there could be differences. And, there's different ways you could approach reconciling the data or different ways you could approach using the comparables. Not making adjustments or not considering the differences, especially for stock and asset sale transactions, probably not a good place to go, right? Because if you use everything together, and everything is commingled, and you have a, say, median multiple, you apply, what does your value indication represent? It's not clear. We looked at, the different scenarios. They produce different results, right? We got different, equity value indications and these different hypothetical scenarios. But, there's pros and cons to each of the scenarios. So kind of at the end of the day, it makes sense to, do what, employ what method, you can defend and make sense to you. It could be anything that we talked about today. It could be something, different. But whatever you do, as you account for these differences and you go through your analysis, it's going to want to be something that you can support and defend, and something that makes sense, to you as a practitioner. And at the end of the day, we have, things like the companion guide and the FAQ page that talk about these differences. So if you're thinking about, hey, the differences between stock and asset sale transactions, maybe converting selling prices, anything else, we have these resources. They're available online. Please, feel free and tap into these, if they can be helpful in your work. If you're looking for where these are located, you can either go to bvresources.com, navigate to DealStats. You can either go directly to dealstats.com. There we have the FAQ page, companion guide, and other resources that you can take a look at to help you think about the data, and some of the comparable companies that you could be using in your analysis from DealStats. All right, so in a minute, we're going to turn it over to O'Day to walk us through the DealStats platform. And he's going to talk about some of the things that we reviewed today, such as where you can find the new Pure Play MVIC price, where you can identify different transaction types from your comparables, how you can see, your acquired, your target, or the private, or the public, how do you search by that? We'll look up PPAs. We'll also give you a little sneak peek of DealStats RADA. And you might be wondering, well, what is DealStats RADA? So RADA is our new research assistant for data analysis. It's housed in DealStats, and it's only on our development server now. So when O'Day walks through all this, you're going to see RADA, you're going to see his searches, and he's going to be in our development environment. And please know that it's much slower than production. So if you're seeing, RADA process questions, you're seeing O'Day run searches, he's in our development environment, and that is a bit slower than production. So when this is all live and you're accessing it, you won't have the same level of potential lag or wait that you might see today. And you might be wondering, well, what does it do? How do we use this thing? Well, it can answer methodology questions. So, you might ask it, do asset sales include inventory? How do I convert a stock sale price to an asset sale equivalent? Things like that. RADA can use the companion guide, the FAQ page, and answer those questions for you without looking them up. It can give you an example. So it's a great resource for things like that. We know you all know these questions now, but you can ask questions like these. Maybe you want to produce a custom data table. So maybe you want to see, in this example here, give me the median SDE multiple for private targets in the HVAC industry by year for the years 2005 and 2024. If you've used DealStats, you have to use multiple filters and a bit of modification on the sale date filter to capture every year independently. RADA can just give you this table in a matter of seconds. You can check it against your own searches, verify its accuracy. You can download this table if you'd like, which it produces for you. And you can even ask RADA, how did you give me this answer? Where did it come from? And you'll actually get the query logic that it produced. And if you notice here, we just specified HVAC industry. We didn't enter an SIC code or NAICS code. RADA can look that up for you. You don't even have to look up your own industry code, if you specify the industry in your search. Additionally, you can create custom statistics. So if you've used DealStats, you know that we have a great statistics tab. It gives you all kinds of statistics for your selected comparable companies, but it doesn't calculate every potential thing you might want to consider. So maybe you're in a situation where you want to know, well, what is the average goodwill value as a percentage of the selling price, MVIC price, for engineering firms? RADA can go through the data. It can calculate this for you, right? A statistic that doesn't currently exist in DealStats. It can look up the industry for engineering, and it can provide you with a result. So a great way to get information without having to extract everything to Excel, run your own analysis, and you can get some great statistics in a matter of seconds. Something else you might want to consider using it for is to create custom graphs. So if you want to see certain line graphs, if you want to see certain bar graphs, if you want to see things plotted on both the primary and secondary vertical axis, right, different data types, you can do that. All you have to do is ask, and it produces those graphs for you. You can have it change the title, the color. You can have it add, text about your firm, and you can download that information, when you're done. So you can download it to Excel, you can download it as a JPEG. So just some of the great stuff that Rada can do. So anyways, again, O'Day is going to show us all this here. On our test server, right, our development environment, a little bit slower, but it's a good kind of example. And I'll turn it over to him. And yeah, while O'Day's presenting, I'll take a look at some of the questions, and then we'll, take a pause here and go through and answer some of the questions. I know some came in, so we'll, maybe kind of about halfway through or at some point in the live demo, we'll take a look at those and answer some of those.
Yeah, I mean, I've been trying to answer as many as I can, but thank you, Adam, for that. Thank you for your for that part of the presentation. And with that being said, we will try to answer more questions if time allows. But for now, we're going to go ahead and we're going to dive into the demonstration portion of today. And I'm going to go ahead and I'm going to stop sharing my cam just so to enhance the presentation for everyone here. And I'm going to go ahead and share my screen now. Hopefully everyone can see my screen, and if not, please let me know. Now, the DealStats platform, here's the DealStats platform. The DealStats platform is essentially structured into two main sections. The top section where there's part of the platform where we apply our filters, adjust our display, get our downloads. Essentially, for the most part, the part where we do our inputs. And the bottom half of the platform, that's the part that will essentially give us our resulting outputs. So the data section, the statistics section, the insights, summary, multiples, and so on. And right here, highlighted in orange, is about over 54,000 transactions as of today, right now in the database, excuse me. And as I go along through the demonstration and apply filters, we're going to see how that number changes as we move along. So in today's presentation, we're going to just run through a quick search, and we're going to cover some of the various features that we talked about here in today's presentation. So let's jump right into it. Under the quick search tab, what I'm going to do is I'm going to start by looking for a company in a specific NAICS code. This NAICS code, I'm going to be looking for transactions in the food services and drinking places, essentially restaurants and other eating places industry. And I'm going to specify my sale date, range from, okay, there it is, 2024 till today's date. And I'm going to use a size metric. My size metric is going to be net sales. I'm going to be looking for comps that have a net sales anywhere between $250,000 to $1 million. And when I go through the various filters under the quick search, I can elect to adjust the target type that I want to be looking at. So if I want specifically private targets, I can go to the target type filter, and I can apply that I only want to see private targets. If I wanted to adjust, the acquired type as well, we can either choose, the acquired type to either be private or public. But in this case, I'm just going to keep it as is. And we can now scroll down. We can see that we have around 284 transactions that fit our filtering so far. And we can essentially go through the data grid to, further analyze the transactions. We can adjust our view. We can organize the data grid in a way that that is appropriate. If you want to look at certain columns in a certain order, and we can go through each individual transaction and try to determine whether it is appropriate or non-appropriate by looking at the data grid. But if you want to dive deeper into the transaction, before we elect to deselect the transaction, so as you go through the data grid, you can, if you go through a certain, if you're looking through a certain transaction, you say, okay, well, this transaction is not appropriate for my analysis, you can go ahead and deselect it. But if the data grid does not suffice, you always have the opportunity to dig deeper and go through the transaction report, which is highlighted here or by clicking on the orange icon located here. Next to each individual row, there's an orange icon. When you click on that, it will generate that transaction report for us. So we can take a much more detailed look into the transaction. This report is going to have information on the information on the target details, information on the transaction, the consideration, how that consideration was paid. The MVIC price, how that MVIC price was paid, the consideration, the various financial information, the income statements, the balance sheets, the purchase price allocation information that we talked about during our presentation, the various financial information of a company, so the more recent financials as well as historical and future projections if available, and various other information that gives us a fairly holistic view of the transaction, ranging from information on non-compete agreements, employment agreements, leasing information, and it will also have the details on the valuation multiples and the various financial ratios ranging from leverage, liquidity, and activity, and so on. And after we go through each of our each of the transactions within our comp set, and we determine what is appropriate or not appropriate, we can then move on to essentially going through the statistics to further analyze and look more into the summary of that information if we wish. And assuming we are satisfied with our selection thus far, we can now move on and try to go ahead and apply the valuation multiples in the platform itself under the multiples tab. Here. So the multiples tab by default is essentially the section where you would input information on your target subject company, and then from there on you would apply the valuation multiples by either using or the weighted multiples application method or the contribution multiples application method. As you can see here, the multiples that are being used, and essentially these multiples are being pulled from our summary statistics that are over here in the summary table. So by default, it is pulling the MVIC valuation multiples, but if we wanted to elect to use the Pure Play MVIC multiples rather than using MVIC multiples, we can scroll all the way here up to the top where it says use Pure Play MVIC. By default, it is turned off, and we can click on the off button and see the toggle and click on and essentially activate the use of the Pure Play MVIC multiples and values. And when we go back to the multiples tab, we can see here that rather than the MVIC multiples are being presented for us to use within either or method, we are now able to use the PPMVIC multiples instead. And when you do that toggle, it does change essentially the template that is available under the equity tab. So as we can see here under the equity tab, we have this one essentially one template, which because you turned your stock sales and your asset sales, you turned them from apples to oranges to you made them comparable, you made them all aligned. You would only need the use of one template to go through to come to a final equity conclusion. But if I were to toggle the Pure Play MVIC off, just so you can see the difference here, and I go back to that equity tab. So, after I go through the multiples, input information on my target company, apply the multiples, and go to the equity tab, we can see here that the equity tab presents us with two separate templates, depending on whether we're working with asset sales or stock sales, right? If that's something that we specify, you want to work with either or. So you don't want to mix and match if this is the approach that you're going through. But if you are going through the Pure Play MVIC approach, then that mixing and matching has already been taken care of, and all you needed to do is just go through this one template. Now, with that being said, I'm gonna go ahead and we're gonna dive into the research and data assistant portion of today's demonstration. So thank you for sticking around for the demo portion of the presentation. Right now, we're going to go ahead and show everyone the sneak peek that we promised initially, and we're going to start things off by essentially seeing where is the research and data assistant, right? So the research and data assistant is located right here in the bottom right corner. As you can see here, there's an orange icon that says RADA, that stands for Research and Data Assistant. When I go ahead and click on it, it's going to present a chat bot that's going to, it says, "Hello, I'm the Research and Data Assistant. How can I help you today?" And Adam had talked about different things that are possible to do with the Research and Data Assistant. I have a series of questions that I have had ready ahead of time, because I don't want everyone to be bored by looking at me typing for minutes on end right now. But essentially you can ask it whatever you want. If it, of course, it has to pertain to the DealStats data set, as well as DealStats assisting documentation. So it's gonna have information on everything that has to do with DealStats, and it will be able to assist you in anything that you wish to ask it, whether on methodology, whether on the data itself. So, for example, the first question I'm going to go ahead and ask it is, use the companion guide and tell me, how do I convert a stock sale to an asset sale? And right now it's gonna be thinking before it gives me an answer. And also, if this view is not good enough for you, you can click on the expand button over here, and it's essentially just gonna make the whole screen expanded into that one chat. And after I asked it this question, it gave me a detailed response on the steps on how I can go about doing that conversion, as well as it gave me an example as well. Again, the various things that Adam had mentioned include things such as also asking it to summarize, to do some summary information on your behalf. So essentially, rather than you going back and forth in the platform, going through each individual time frame to get certain bits of information. If you're trying to analyze an industry over a certain time frame. So right now I went ahead and I asked it, for example, provide me with the median SDE multiple for private targets in the HVAC industry by year for years from 2005 to 2024. Essentially, right now, as you can see, it is generating a table that contains the median SDE multiples over that specified time frame that I mentioned in my prompt, and it gives me some detailed explanation on what the multiple is. And also, one very nice feature for me, I'm sure it's a very nice feature for everyone, but for me, what I really like about this is that it gives you a really nice detailed view of what it did exactly from an SQL perspective. Our information is housed in SQL. So if you want to see exactly what it did to get to this information, it will show you exactly what it did. So if you wanted to really dig into what it did, so I just really like that feature for myself, because it gives more transparency to exactly what you're looking at. And if it didn't do that per se, or if you want even more detail, you can further ask it to how did you actually derive this information, or how did you come to derive this answer. It will also give you a more detailed, thorough example, or more thorough answer on how it went to apply that, or how it went to coming to that conclusion, right? So it's what's walking you through its thought process. And it will ultimately also give you the SQL execution query as well, in many cases. Also, with that information that I was just provided, in this research and data assistant, you also have the ability to ask it to not only get information summarized fairly quickly, however that information, or whatever that information may be. This is just one example that we're giving here, right? So there are many things that you might have in mind that you want to try out, and you definitely have the ability to do so. And the research and data assistant is very flexible and very fast in answering your questions. But one thing that I would like to demonstrate is that with data, it not only provides you the data, but it can also assist you in visualizing the data. So for right now, I asked it, can you please take the information that we just got and turn it into a graph for me, essentially. And here's a graph. And when it comes to graphs, also the research and data assistant is very, very nice and very helpful, because you can, it's not just a simplified way of doing things when it comes to graphs. You can also take your graphs, take your visualization presentation to a whole nother level, because you have the ability to not just quickly visualize our data, the DealStats data, like make one graph, two graph. You can also build on the graph that you're looking on, right? So right now I asked it for the SDE multiples for HVAC. So because we asked it about SDE multiples for HVAC companies, right, from 2004 to 2024. It gave us that data. I told it, hey, can you please visualize that for me? It visualized that for me by a line graph. And now I'm interested to see other things when it comes to the graph. I'm asking it, can you add another set of information to this graph, so I can also so I can enhance my analysis. I want to see, okay, well, what are the differences between like EBITDA multiples and SDE multiples? So that's something that I want to observe right now. And right now it's going through the process of writing the code to execute. Again, it's a little on the slower side right now, because we are in the test space of our environment, essentially. When this goes live, it's going to be much more faster, and it's going to give you your answers much more quickly. And you can build, and you can continuously build on this graph. Okay, well, what else do I want to look at in relation to the data that I currently have? You can continuously build, and this takes your analysis. Takes your analysis needs to a whole nother level when it comes to delivering this information and delivering this analysis. As you can see, we did all of this in a relatively short amount of time. Whereas if you were to do it manually, it would take a lot longer. Also, one of the questions that I have queued up here to ask the research and data assistant is essentially, as Adam had mentioned, in the DealStats platform itself, we have information, on 220 on about 212 data points right now, which includes ratios, for various different things, right? But let's say again, if there's a ratio that you want to analyze, or you're interested to know what that number is, you want whatever that number is, it's all you have to ask it. All you have to tell it is, I want this as the numerator, this is the denominator. Give me that number. Here's an example question. So, like, for example, I'm asking it right now. Calculate the average value of goodwill as a percentage of the MVIC price for engineering firms, right? So that figure is not a figure in the database. That figure is something that I just told it to make it for me custom. And it went ahead and it got the average value of goodwill as a percentage of MVIC for engineering firms, and it gave me that number, approximately 56.36%. And it went and it provides me with the SQL query to give me more transparency on how it came to that number, and it gives me more explanation on how it went about doing things. So again, when it comes to the research and data assistant, everything that I just demonstrated right now, I myself personally, when I work with the research and data assistant, I ask it a lot of questions, that are fairly complicated. I really dive deep into my analysis sometimes when I want to further look at the DealStats database. I know that kind of be a nerdy thing, but I like data. So but what I've demonstrated here today is essentially the tip of the iceberg. So we're very excited to roll this out. We're very excited to have this in front of everyone very soon, and we are also excited to see how you guys will use this to your benefit. And with that being said, I'm gonna go ahead and move it back to Adam Manson to see if we have any questions that need answering, and to finalize our presentation. Thank you.
All right. Well, thank you so much, O'Day. Thank you to everyone who joined us today. Sorry, I realized I was supposed to turn off my webcam so you could see more of O'Day's screen, and I totally forgot. So big apologies from me there. We did have a lot of questions. I think we've scheduled to end here in about just under 4 minutes. I know we can go a little bit over, so maybe we'll go through as many questions as we have, and then we'll get back to you. Anyone who asks a question here, we'll get back to you outside of this presentation, or you can see my contact information, O'Day's contact information here on the screen. Please save our phone number. Please save our email addresses. Please reach out to us. Love to chat with you. Love to, assist and talk about anything that, you want to, talk with us about. So one of the questions we got was, can you briefly explain the difference between a standard MVIC and a Pure Play MVIC? So just to reiterate, the Pure Play MVIC price in DealStats, it is just the value of fixed assets and intangibles for that comparable company, whereas the reported MVIC that we have for that same transaction is the value that was paid for the firm. So it was the actual amount paid for the firm with the value of any assumed interest-bearing liabilities added back. And we talked about some of the differences between stock and asset sales and what typically transfers, and that's what would be essentially what would comprise the standard MVIC price for those companies. But regardless, the Pure Play MVIC price for those firms is just the value of fixed assets and intangibles. Another question we have is, let's see, what specifically do we add back to Pure Play multiples? So in the scenarios we walk through, if you're working towards an equity value and you've applied a Pure Play MVIC multiple, you'll be adding back the values of the assets your subject company has that are in addition to fixed assets and intangibles. And you'll be deducting your subject company's liabilities, both interest-bearing and non-interest-bearing liabilities, to get to an equity price, because that value indication from the Pure Play MVIC price and the Pure Play MVIC multiples is giving you the value indication of fixed assets and intangibles. We have another question here. What is the difference between MVIC and enterprise value? So if you're looking at a stock sale MVIC price in DealStats, the equivalent enterprise value would essentially be subtracting cash from that stock sale MVIC price. That's the difference there. For asset sale transactions, it's not the market value of equity, market value of debt for the company, right? It's just the inventory, fixed assets, and intangibles, generally speaking, that are part of that selling price. Another person here asked, why don't we report enterprise value prices? You can create those from the reported equity sale MVIC prices, but it's really hard to try and create that from an asset sale transaction because you don't know the assets, the value of the assets that were not acquired, because the purchase price allocation is including what transferred, which for asset sale transactions is generally inventory, fixed assets, and intangibles. So you can't really work back to, at least easily, an enterprise value without a lot of assumptions. So it's tough to calculate for asset sale transactions. The majority of our transactions are asset sale transactions. We have another one here. I think it's referring to scenario 4, where we adjusted those stock sale prices to asset sale equivalent prices. I said, making these adjustments to each comparable seems time consuming. It's true, it can be. Hopefully the Pure Play MVIC price and the multiples help with that. So you don't have to manually make a lot of adjustments that are time consuming. You can get a similar selling price across all of your comparable companies. If you do have a mix of stock and asset sale transactions, you want to use it. It's up to you. It's available. Just something to consider. We have one here that asks, basically, how do you treat real estate? We didn't include real estate in the different scenarios as an asset for our subject company. So the values of the selling prices and deal stats are net of real estate. So we back those out. If we have a transaction that includes land and buildings, we take that value from the purchase price allocation. We subtract it from the selling price. It's not included in the multiples. When you apply them, it's not included in the resulting value. To the extent that your company has, land, buildings, that value would need to be added back if you're working to an equity price, because it's not included in the deal stats, selling prices, or multiples. Let's see. So here somebody's asking, basically, is EBITDA adjusted for things like, personal expenses, that the business owner, wrote off or ran through the business, things like that. So when we receive a transaction from a contributor, so somebody who's a member of our contributor network, they will submit a value for SDE or EBITDA that basically includes any of those adjustments. So essentially the SDE and EBITDA that was adjusted, that EBITDA value, that SDE value they use on the listing, the EBITDA that they show to potential buyers, and the final buyer that includes all those adjustments, that's predominantly what we use for the EBITDA and SDE values for those transactions that come from those business brokers and M&A advisors. There might be some instances where maybe we do not have those values, so maybe it's from the reported P&L, but generally speaking, it is those adjusted values. Somebody here asks, let's see, where did that go? Do all the transactions do the all data transaction download to Excel include all the data in the tear sheets? So I think they're asking, if you do basically the all fields download, are you getting everything that you see in those transaction reports? That O'Day walked through when we were on the platform. And yeah, you're actually getting all of that information for each of those transactions, plus some, because there are some values that we don't include on the transaction report that are in the all fields download. So if I understand the question correctly, you get all of those fields and more if you do the all fields download. So here's I guess it's more of a comment, not really a question, but somebody says, shouldn't you disclose that the harmonic mean creates an ultra-conservative metric that would cause the conclusion of value to be undervalued? So we're not here to, suggest you should use the harmonic mean, the median, the standard arithmetic average. That's up to you and your professional judgment, what you want to utilize. If you've seen the platform and you've been in there, you know that we calculate all of those measures of central tendency. We calculate all those percentiles. Clearly, DealStats and BVR is not an advocate for any sort of, calculated measure of central tendency. That's up to you as the practitioner, but we provide it, and definitely something that, if you want to consider it, obviously you should understand it and make that decision for yourself. We have a lot of questions about RADA. Obviously, we're not going to be able to answer all these. I think, gosh, we probably have at least 25 questions just on RADA alone. So one of them is, let's see here, does it provide all the detailed explanations of how it gets the answer so it can be explained in court? And I think O'Day did a great job of really walking through how RADA reports on how it came about, getting the results and providing you with the results that it gave you. It goes through, it provides you with the specific SQL query. It tells you what SIC or NAICS code it utilized if you just specified an industry by an industry name. It gives you all kinds of great information to support what it did and how it provided the calculation. And I think the thing O'Day also noted too is that you can ask it for more information if you want to know more about how it produced that table, how it produced that calculation. So that average goodwill to selling price for engineering firms that O'Day walked through, you can ask it and it will give you more information. So it's really comprehensive and a great resource. I see some other questions that are asking, can RADA do certain things? And right now, where we're at with RADA is that it can produce custom analysis for you, whether it's tables, graphs, calculations. It can give you information just about the data set. So if you have a question about, what's the average SDE value for, this type of company, across each state in the US, it can look at that information. It looks at the data table and can provide you with the analysis based on how you ask that question. So I think there's going to be a lot of great uses for RADA, and I think our customers and our subscribers are going to really find that out as they get in there and start utilizing it. So we also had some questions. How do you download the graphs and charts? We're currently working on that feature now, but just know that there will be a feature to download graphs and charts once this comes to the production environment and you access it within DealStats. All right, so we've gone 6 minutes over. I think we were supposed to limit it to 5 minutes over. My apologies to everyone. Thank you so much to everyone who joined us. We'll connect with you all to answer any questions. Please reach out to us. And now I'll turn it back over to Amanda to close us out.
Great. Well, on behalf of BVR, I want to thank Adam and O'Day for an excellent presentation. And thank you to all of our attendees for your great questions. If we didn't get to answer some of them, we'll do our best to get back to everyone. As a reminder, to receive CE credit, you must complete and submit a brief survey on this webinar. A link to the survey is provided in your login email and on the reading page for today's webinar. Your feedback is key to providing the best possible programs for you, so please provide us with any suggestions you may have. If you choose to fill out the survey now, your browser will automatically direct you to the CE credit page when I finish speaking, so don't disconnect. The survey will be active for 5 days and must be completed before we can process certificates. After 5 business days, we'll process your CE and send your certificates via email. You can also now access your CPE certificates on your individual MyBVR account under CPE History and Certificates. This is a new feature that should make it easier for attendees to track their CPE history with us. If you have any questions related to the content or format of this webinar, please email me at training@bvresources.com. And coming up for more BVR webinars, this Thursday we have another free webinar and it's titled Introduction to BVR's new internal AI tool, RADA. So hopefully some of you who had questions about that can get those answered in that webinar as well. And on August 5th, we have Valuing Veterinary Practices with Karen Felstead. You can find additional offerings on our calendar page as well under live events. Thank you all for listening. Have a great rest of your day. We're going to end this webinar now, so please go ahead and fill out the survey.